In the quarter, the markets fell slightly overall, with the global market index down 0.3%. That was really influenced by a fairly weak September month. What's been going on in the background in the markets has been obviously a lot of toing and froing in the news about COVID, with the Delta variant spreading around the world, causing some concern, although overseas most markets have begun to open up and sort of abandon restrictions. There has been a bit of an energy crisis, particularly in Europe, where oil and coal have rocketed up. Some energy shortages there, power shortages as we go into winter. But then on the other hand, gold's been about flat and iron ore halved in the quarter. So sort of a lot of movement in commodity prices. The Australian market was stronger than global markets, up 1.8%. I imagine that's partly strength in energy, coal, things like that, but also the industrial stocks were quite good and offset the big fall in iron ore. IML's portfolio is benefiting partly from the iron ore weakness, but also some very good stock results. We're up more than double the 1.8% benchmark gain, with the main portfolio up 4%. There were several very good contributors. One that we've been talking about a lot in our roadshows and so on was Telstra, which had a good result. The business had the first year period-on-period increase in profit in some time, because they've been losing profit because of mobile price war and losing a source of income from their fixed line broadband offer as it goes to the NBN. So the Telstra was quite strong, but much stronger indeed were two takeover candidates. Z Energy, the leading petrol retailer in New Zealand, was bid for by Ampol, the old Caltex of Australia, and AST AusNet also being bid for. In infrastructure stocks seem to be very much in vogue, and AusNet has received 2 bids. Also doing very well was Incitec Pivot, which has rallied a lot on the restart of their Waggaman, Louisiana ammonia plant, having had a rather unfortunate shutdown. That plant has restarted, and good profits are being made because of commodity prices for ammonia and fertilizers have been very strong. We remain cautious. The markets, although they're taking a breather overseas in the quarter, have been very strong for some time. We're well off our COVID lows. I know a lot of people think zero interest rates mean that valuations can be very high, but we are at quite high valuations for a very large number of stocks and sectors. We do find value selectively, and we're quite excited about how our portfolio looks relative to the overall market, but we do believe that our defensive portfolio is a better risk-reward trade-off than a more market-oriented portfolio, because there are still a lot of stocks where we scratch our heads as to how they are being valued.